Hey, what's up, everybody? Ralph here. So lately, we've been hearing from a lot of CEOs about the upcoming recession, where some are, talking about how bad it's going to be, how long it's going to last. Some even, I remember at a point, some people were saying it was going to be a mild recession. But I think right now, a lot of people are coming to the realization that it could get bad, especially with the amount of debt that we have, and you have inflation going on. So I think a lot of CEOs are and big companies are coming to the realization that this recession could be bad and it could last a while. One person in particular is Elon Musk, right? He's talking about how we're already in a recession, that it could last for about a year and a half, and that basically the people that are going to survive are those that are prepared. So basically, what I'm doing in this video is just right now I just want to talk about what you need to do, what I'm gonna be doing in order to prepare for a recession that could be coming up, or the recession that we're already in, as it progresses, how bad it could be. So I just want to quickly talk about how to prepare for it. If you're someone that's trying to figure out what you should do, money wise, finance wise, how you should prepare for that. But before I want to do that, I just want to quickly go over this article where in regards where Elon Musk talks about the recession and how long it's going to last. And it's an article on Yahoo. It's an article on Yahoo, but it was taken from Fortune.com. But it talks about how Elon Musk says we're already in a recession that could last until spring of 2024, and only the strong survives, right? So he says the world could be facing the longest recession that has been since the global financial crisis over a decade ago, according to Tesla and SpaceX CEO Elon Musk. Asked to predict the length of the contraction in economic activity, the world's richest and most successful entrepreneur responded on Thursday, probably until spring of 24. This would set the U.S. gross domestic product on course to shrink for a period longer than the 18-month recession of the global financial crisis, which lasted from December 2007 to June 2009. So it says, while these bouts are painful, Musk indicated that they do serve the valuable purpose of shaking out bad business ideas by cleansing the market of so-called malinvestments. So basically what he's saying is, although it is a bad thing, but what it does is businesses that haven't been operating efficiently, it'll clean those people out, right? So it'll get rid of those businesses that haven't, been making sure that they've been preparing for, bad financial deals, or they've been taking on too much debt and they haven't prepared themselves for situations like this. So, when times were good, people were taking on a lot of money. And, I think right now he's saying that when times are bad, this is where you're going to see who's really been operating at an efficient rate. So he's such poor investments gradually build in the system during boom times as capital chases increasingly marginal profits until the incremental returns no longer justify the risk. A key element factoring into investors' calculations is the cost of money, which is set by the policymakers at the world's central banks. Until its recent shift to rate rises, the largest central bank, the U.S. Federal Reserve, had its foot on the accelerator pedal in an effort to suspend the normal dips of an economic cycle. So what he's saying is usually, obviously, during time periods, we always have, ebbs and flow, right? You have, booms and you have busts. And there was a time, obviously, I think since the last recession of 2009, 2010, this past decade, we haven't really had a serious recession. Obviously, during the pandemic, we had that brief minor recession, but because the Feds have pumped so much money into the economy during that time, it kind of made the recession very short-lived, when in reality, if you just let it go through its natural order, we'd have went through our recession already. But the Feds kind of manipulated with the pumping of money through stimulus, or just pumping money into the system. It kind of just made that recession kind of short-lived. So I think that's what he's talking about when he said that they had his foot on the accelerator pedal in an effort to suspend the normal dips of an economic cycle. So it is no accident that ever since June 2009, the U.S. economy has contracted only once for 2 short months, according to the National Bureau of Economic Research, the government agency that declares the official start and end dates of a recession. Now, it says, ever since the global financial crisis, policymakers have pumped unprecedented stimulus into the system to prevent a recession, mainly in forms of trillions of dollars of freshly created money, but also through fiscal measures such as corporate tax cuts and pandemic checks. In such a cheap money environment, investors have been rewarded for withdrawing their savings and putting the money to work by backing new startups that promise to solve major social problems such as Theranos and Nikola Corp, or have innovative ideas like Juicero and Celsius. So he said, all right, the bill comes due. So not inflationary economic growth is largely a function of productivity and cannot be achieved through sustained money printing. Although the modern monetary theory, until recently fashionable in some cases, did attempt to argue there was such a thing called free lunch. So basically we're saying you can't keep pumping money into the system, right? All right, this is creating this debt. We got I think about $30 trillion of debt. Eventually you have to pay that back, right? You can't just, it's almost like you have a credit card and you're just racking up the debt. Eventually you're gonna have to pay that back. And obviously with the government, they have like endless amount of money, but it gets to a point where you can't just keep doing that, right? You have inflation, things are more expensive, and eventually you have to pay that back. So that's something that we have to face, and we have to obviously be more fiscally responsible. So eventually the bill comes due, triggering a wave of insolvencies as weak managers run out of investors willing to finance their business plan. Recessions do have a silver lining in that companies that shouldn't exist stop existing. Experts believe that that point is upon us. After offering markets of buffet of nonstop cheap money, the Federal Reserve has now been forced into the abrupt reversal of cool off and overheating economy, especially with all the low interest rates at the time, and yet interest rates were below 3%, just cheap money. So if you got businesses and corporations, using that money to take on debt, it's just basically you're borrowing cheap money. But now, as interest rates continue to rise and the feds are, bringing that interest rate up, it's becoming more expensive to borrow money. So now less people are borrowing money. It's becoming more expensive to borrow money. So you'll see less money going into the market, into the economy. So less than a week ago, the newest winner of the Nobel Prize in Economics, Douglas Diamond, told Fortune that the U.S. Central Bank held rates too low for too long and now risks the crash. This year alone, the central bank hiked rates by 3 full percentage points, dramatically affecting asset prices for everything from stocks and housing to cryptocurrencies. As recently as the start of March, when policymakers knew inflation was running at 8%, the Fed was still expanding its balance sheet, and with it, the money supply. So Elon Musk himself recently expressed his disdain for the Fed, agreeing with Wharton Finance professor Jeremy Siegel, who blasted Fed policymakers for making the biggest mistake in the institution's 110-year history. Siegel is obviously correct. Ironically, one of those companies that might not have survived is Musk's. So even Musk benefited from this pumping of money into the system. So the CEO admitted back at the height of the stock market bubble that Tesla was about a month away from bankruptcy. The prime beneficiary of the 2020 pandemic rally might not have survived had it not been the Fed's decade long of ultra low interest rates and monetary stimulus. All right. So as you can see, obviously, it gets to a point where, when you're pumping all this money to the system, you're racking up all this debt. Eventually, you have to pay it back. I know a lot of people think that the United States have a bunch of money. They can just print money all they want and they can cover it. But as you can see, there's an effect of that. Obviously, now you see inflation coming up. You're seeing things becoming more expensive. It gets to a point where you eventually have to pay back your debt. We all have that responsibility, even in your own household. If you're someone that has a lot of credit card debt, I know from experience I had that. It gets to a point where it cannot sustain itself, because if you make X amount of dollars and your debt is exceeding your income, it gets to a point where you just don't have enough money to cover those debts. So obviously you have to tighten the wallet, and you have to make sure you say, we have to make some cuts. And eventually that's what the United States is going to have to do. They're going to have to cut some things. People are going to go through a lot of pain, and it's going to be tough, because it's going to be, you're going to see a lot of people struggling, not being able to afford certain things. And you can see that with the Feds, how they're raising the interest rates, obviously to curb inflation. But it's going to make it tough for a lot of people, because once the Feds are raising that interest rate, what it's going to do is that companies are going to be like, all right, now it's too expensive to run this company. We're going to have to make cuts, and unfortunately, that's going to impact workers, because they're going to have to let go of people that work at their company. So what should you do? So how should you prepare for this, right? So one of the things you should do is, obviously, if you're someone that has their finances in order, then obviously you want to take advantage of this, right? It's sad that some people are going to struggle and some people are going to hurt, and it's going to be, a lot of people are going to probably lose their jobs and not be able to, do the things in order to, feed their family, or make sure to take care of their family the way they want to financially. But And you know, you never want to see that, but this is an opportunity for those that have managed their money correctly and sees this opportunity, you know, to make sure that, you know, you're doing, you know, you're doing well with your finances. You're putting yourself in a position to thrive, right? And that's what you want to do. And how are you going to do that? You obviously make sure you're spending less and saving more. That's obviously, that's like, you know, if you're anyone that's good with money, you should be doing that anyways, right? So another thing is like, you want to find a way to create more income, right? So let's say you have your finances in order, but maybe you don't make a lot of money. You want to make sure you can find a way to create more income, because obviously you want to make sure as you're creating income, you're putting yourself in a position to make sure that you get through these tough times. Because right now, another thing is like investing in cheap assets. If you look at the stock market, a lot of things are in sale, right? So this is a great time for, they talk about how this is during, recessions, this is where a lot of millionaires are made. So you want to make sure that you're creating that extra income. You want to save up that money, so when the opportunity comes to buy these cheap assets, you're in a position to do so. Right. And that's what I'm doing like every month, or maybe you have a different strategy where you're investing every week. Right. You know, that's called dollar cost averaging. Whether you're investing every week or you're investing every month, you want to make sure you're putting a certain amount into the stock market every week or every month. You don't want to throw all your money into it. Obviously, you just want to make sure you're investing every month and making sure you're putting yourself in a position to take advantage of stocks that are in sale. Now, for me personally, like I don't invest in stocks individually, not yet anyways, but I do invest in like ETFs. And one of them, obviously the most popular one is the S&P 500, okay? And that's what I'm doing. Like right now, I'm trying to position myself like to make sure that during these times, like I want to take advantage of these cheap assets right now. I want to make sure every month I'm investing in these things, so I'm putting myself in a position to grow my wealth. Another thing you want to do is you want to invest in yourself, right? That's the most important thing. So during these times where everybody's hunkered down, everybody's tightening their wallet, you want to make sure you're educating yourself financially, making sure that you're putting yourself where you're understanding how the money works, or how to invest, or how to collect more assets and build more wealth over time, right? And you can do that by reading books and just making sure you educate, watching YouTube videos. These are great times to like really educate yourself and really invest in yourself. And even if you're someone that has the means, maybe start a business. A lot of people tell you how this is a great time to start a business. Obviously, you don't want to put yourself in debt. You want to make sure you start slow and then scale up. Whatever business that is, make sure that if you have a little money around, you want to start a business, doesn't cost that much to do it. This is a great time to do it. And especially during these rough times, as you're working on your business and when things get better, your business will be in a position to thrive. And that's what I'm doing right now. So I'm also investing in the ETFs and stocks. I'm setting money aside just in case, like you say, the real estate, if there's like a crash or if there's an opportunity to buy some real estate, I put myself in a position to be able to purchase some real estate. And also I'm working on my business, going through the grind, making sure I'm setting itself up so when things get better, that my business will be in a position to grow when things improve. So like these are the things that I'm doing. You probably, there's something, hopefully like some of the things you're doing as well, making sure you're just putting yourself in the position to thrive and make sure you're successful. And if you're someone that's struggling with debt, obviously the main thing you want to do is you want to make sure you get rid of that debt. Right? So you want to be working on taking out that debt, so you're instead of having to pay someone else, you're paying yourself and making sure you're setting yourself up financially to thrive during these bad times, because things will get better. Who knows how long it's going to last? Obviously, you hear Elon Musk talking about it might last till the spring of 2024. It seems like it's a long time, but that thing's going to come quick. But obviously, when that time does come, you want to make sure that you're set, you're ready, and you're in a position to make sure you can overcome any situation where there's dips in the market. So that's all I got for you guys today. If you got any comments or questions, make sure to leave it down below. Hit the like button, share. And if you haven't done so already, make sure to subscribe. All right. So you guys take care and have a good one. Later.